Hello again, everyone. This is Joe Hinches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, May 2nd. Happy May, new month, and this is the weekend edition. So we're going to take a look at the markets here, daily, weekly. We had 2 days of price action. Well, actually, 2 days of price action since my last video. And then we'll look at the weekly charts. I'll actually take a quick look at the monthly charts. Then look at our indicators and key ETFs and 4 stocks today: Las Vegas Sands, MGM Resorts International, Melco Crown Entertainment, and Wynn Resorts. Or I don't know if it's Wynn Resorts, but Wynn. I think you all know who I'm talking about. W-Y-N-N. So the casino stocks today. Okay, so let's start off here with the Dow Industrials, up 183 points yesterday. So a little bit of seesaw, back and forth. So where was a week ago, the 24th, I believe. So we've had 5 days. So we're still down for the week, even after that big day because of Thursday, even after 183 points here, because we were down about 190 something on Thursday. So just again, we just seem to be chopping sideways. Now, one thing I just noticed, and I was just thinking about this, I've got this rising wedge here on the Dow Industrials. The one thing about a rising wedge, when you break down out of it, usually you break out of these kind of wedges fairly quickly, kind of like what the Russell 2000 is doing a little bit right now. We'll take a look at that in a minute. So I'm starting to wonder whether this is morphing into something else. And we could be morphing into something else, and so we'll just have to look and see. S&P 500, we're still kind of in this. I'm still calling it a wedge, still calling it. It's a little bit different points in where the lines and the trend lines are. Now the S&P was a little bit different. The Dow was an inside day yesterday. Now the S&P 500 wasn't. It closed above yesterday's close, so it's back above the 10-day moving average. So we get 1 day down, we don't get any follow through, and we come snapping right back. So kind of like what we did right here, although we didn't close above the high. So it's again, 1 day's action. Does closing above the high here, does it mean anything? I don't know. I got my doubts. Sometimes it's more important than other times, and right now I'm not sure it's meaning anything at all. So let's take a look at the NASDAQ. Similar type thing. Now the NASDAQ looks more like Thursday was a breakout of this wedge, okay, kind of tight in here, and then looks like a pullback to the trend line. Now we'll see whether we continue to push back up into this, but that's the way the NASDAQ is looking right now. And again, we're getting both closes today. Actually, I think this day was below the 10 too, so we're getting a sequence of closes below the 10, but it didn't continue to break down, didn't take out Thursday's low. New York Composite, a little more up into this consolidation, into this wedge, and a similar type activity to like the S&P 500 in terms of the way it looks. Now the Russell 2000, look at this wedge. This is a little more, now it's pushing out into the apex a little bit, which weakens the move some. But now, it broke down, hugged back a little bit, now seems to be breaking down with a little more power to it. So this is something to watch. Now it looks like it may be getting a little bit of support. Now it hasn't gotten that far. It hasn't gotten as far as down here. Now, here's the bottom of the wedge to me. That's why I put these dotted lines down here. This is the bottom of the wedge. So we'll see how quickly and how fast this gets down here. And do we continue to get a move like that out of here? So right now, it's looking pretty negative. It's at least short term anyway. Let's put it that way. I mean, we don't have, moving average wise, we still got the 21 above 55, above the 233. I mean, intermediate and long-term trend is still up. Short-term trend is definitely turned down. And so we'll see whether or not this becomes strong enough to turn the intermediate trend down also. Now let's take a look on a weekly basis. Again, the kind of congestion in here. I'm not sure this is telling us a whole lot new. We're continuing to have divergence on all 3 indicators I've got in here. continue to show that. Now, it may go away, but right now, same thing with the S&P 500 on a weekly basis. The NASDAQ, same thing. Now, it's interesting here. I've left only one dotted line. This number 5132.52, that is the all-time intra-week high back in 2000, March of 2000. And we came up just within a hair of that, 5119. So literally within, what is that, 13 points of that intraday high this week, and then reverse back down a little bit. But we're still in a kind of a congested looking pattern. And then I want to go to the New York Composite Weekly. There we go. New York Composite, similar type picture. This looks a little more wedgy to me than it does, a continuation head and shoulders. So we'll see if this is going to collapse out of here. It's going to need to do it fairly soon. Right now, it's continuing to ride above the 10-week moving average. And then the Russell 2000 weekly, knew where I was going to go. How does it now? Okay, so now we got a big pullback here. Again, that's what we were just looking at, the drop out of the wedge on the daily chart. It's pulled back. Now, where the low, it's kind of interesting. It pulled right to this dotted line. All I did when I went back through is I just extended this dotted line out. I did not move it. I didn't put that in today. That's been there for weeks. And so you can see it's broken above, pulled back down a little bit, broke higher. Now it snapped back to that. Is this going to hold and provide support is going to be the big question mark. And let's see. Okay, now we want to move to the monthly real quick. Okay, here's the Dow Industrials monthly chart. Okay, so the big thing I want to point out here is this trend line from the low of March 2009. It's been broken. I hadn't had this on the chart, but I thought I'd go ahead and put it on. Since July of last year, it has been trading to the right side of this trend line, okay? And now, and it just seems to be pulling away from it a little bit more. So I just think that I find that kind of interesting. Now, we haven't broken down, started closing below the 10. We also got a pretty consolidated trading range for the month of April. Look how tight this is. So again, I get frustrated with some of these stocks don't move as far as I think they're going to move, and part of that is when the market starts getting compressed action, it's just not going anywhere, and it's the most compressed month since September of last year. So that's kind of interesting. And then we'll look at the S&P 500 on a monthly basis. And again, as opposed to the Dow, here's the trend line. But as opposed to the Dow, the S&P is staying to the left of the trend line and above the 10. Now we'll take a look at the NASDAQ. Okay, now NASDAQ is a little bit more like the Dow, starting with December. The main body of the trading has been to the right of the trend line. Okay, main body of the action is right of the trend line. So it's going to be interesting to see, does it continue to hug or does it start to pull away? And then the New York Composite monthly. Again, you can see how it broke it pretty sharply with October, with that big sell-off we had, kind of a correction in October. It closed back above it, but then in December, again, it closed back above it, but the main body of the trading was here. But all of the trading of the last 4 months and closes have been below this trend line. And so it's kind of pushing sideways out to the right, and it looks like it may be wanting to come back down. At some point, I'm going to get into the monthly view on all of these. They're a little bit different. The Dow is different from the New York Composite, which is different from the S&P 500, which I find kind of fascinating. And then the last thing we'll take a look at is the Russell 2000 monthly. Here we go. took a while to find it. So again, this is trading to the right hand side of the trend line too. So we're going to continue to watch this 1, 2, 3, 4, the last 4 months. All right, let's take a look at our indicator short-term trading index. Okay, ding, 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 ding. For the first time since February 17th, we have a 10-day reading below the 0.9 at 0.88. So that's a 10-day average of the short-term trading index. So it's getting, because of all these bullish readings that we've been getting, we now got the 10-day down in here. So when have we gotten the 17th? November 21st and September 16th. So let's pull the S&P 500 up. So this is February 17th. So when we got an extreme reading, we had a few more days to the upside, then we rolled over fairly sharply. And then November 21st, I think I said. Again, that's right in here, a few days before the top. It's like we start to get a little bit of an extreme reading before it rolls over. And then the last one was September, gosh, what was it? September 16th. And that was right here. Again, a couple of days before it peaked and then rolled on over. So this is going to get interesting to see whether or not this plays out for us again. So this is an alert in my mind to be watching for this. When you look at the VIX, here we go. Now the VIX dropped back dramatically. You could see it had this big kind of breakout move. Let me extend this moving average to the right. Okay, you can see it tried to do it on Wednesday, definitely did it on Thursday with the big down move on Thursday, and then it comes collapsing back on Friday. Now, we'll see whether or not, I mean, we don't have the 10 breaking above 21 yet, so we don't have a move that's turned yet, but you could see how fast it can happen, like back in here. I mean, it just erupted. It can happen pretty doggone quickly, and sometimes it'll cross and then just meander for a while and then erupt. So there's no telling for sure what it's going to do, but this may have been a little signal that it's trying to do something here. What the action on Thursday, high-low indicator, and hopefully I've got that. Yes, here we go. Okay, Thursday's action took the high-low down below zero, so we had more new lows than new highs for the first time since back in early to mid-March. And with our bounce yesterday of up 180 some points, we only had 8 more new highs than new lows. So not very strong at all with that move. We clearly look like, okay, we didn't confirm the move with up in here with what the market was making, the indices starting to roll over, and so we'll see whether or not we get further action to the downside. McClellan oscillator, that's going to be back on the New York Composite. There was where I've got it. So it's pulled back up with this move, and we're back up here around 90, pushing back up to the high of April 6th. Haven't gotten quite to the highs of early February and late December yet, but we're starting to get up in there. So, last peak in here was April 6th. So what did April 6th look like? April 6th was back down here before it started rallying. So again, what happened was you got this move, and this didn't really get confirmed very well by the New York Composite. So here was the peak on April 6th. And you could see all of this choppiness didn't really confirm all that move to the high side with the McClellan oscillator. You kind of like the high-low. All right, that's it for the indicator. Oh, the put-to-call ratio, the 10-day equity put-to-call ratio. So on stocks only, and this is from the Chicago Board of Options Exchange, is 0.65. So I keep this in a spreadsheet, and I always do 10-day average of it, and it's 0.65. So it's not at an extreme reading there on the put-to-call. All right, let's take a look at the high-yield bond fund. Okay, so the high yield is rolling over some. And in the past, when this is pulled down to the downside, it's doing that and the market's going with it. So, I mean, you see this rolling over and breaking down, starting to get the moving averages crossing, kind of like what they did here and back up in here. I mean, the last time they crossed was early March. Now, so if we go, let's take a look at the Dow this time. And you can't really say the Dow's collapsing. I mean, this looks like it tried to on Thursday, and that's the other thing I was going to mention. It broke that trend line in here, but it didn't. Again, we didn't get any follow through. So, this could be kind of a little bit of a leading, trying to tell us ahead of time that that's what it's doing and where it's going. We'll see. The long term, the 20-year TLT is what I'm looking for. There we go. iShares 20 plus years. This keeps collapsing down, so long-term interest rates are rising, okay? And we're getting close to where this had some support down in here before. And, you got it right in here, got it right in here. So around 123, getting pretty close. We'll see whether that holds or not. And then we want to take a look at the dollar index. And the dollar's doing exactly what I had described the last few weeks, where I said, okay, it starts to break down. I was expecting it to pull back down into this consolidation of the fourth wave, and sure enough, it has, right into the heart of it. Okay, so it pulled down to that on Thursday and rallied back up on Friday. So now we'll see where she goes. We'll see whether this corrective move is enough or not. This almost looks like an A, B, C, although I don't see 5 waves in here for C. So we may have a little bit more to go to the downside. Let's take a look at United States oil, USL, United States 12-month oil. Okay, so oil is continuing to push higher up in here. Not big, not a big move, almost unchanged really on Friday, 0.01. So it's slowly, the last 3 days, it kind of like penetrated, pulled back on Wednesday, made the move on Thursday, and kind of sideways consolidation on Friday, but it's getting above this dotted line in here when you look at that. And then the last one here on the market ETFs we're going to look at is gold. And gold got everybody excited back over here on the 27th last Friday, and what was it? Oh, that was Tuesday of that was Monday, Tuesday. Okay, so big move at the beginning of the week, and then it just collapses on down on Wednesday, Thursday, Friday. So again, I'm holding with this. Thinking we're moving 1, 2, expecting a third wave down. We'll see whether or not this continues to move or not. If it's a third wave, it's probably going to start getting strong, get some power, and come on down and take out this low. So we'll see whether or not that does it. That's what I'll be looking for. That's what I'm watching for as a part of the scenario. All right, let's take a look at the market sector ETFs, I call them. Okay, the first one is semiconductors, and semiconductors rallied big on Friday. So we got this big move up here, and it looks like it's come up to a trend line. We'll see whether or not that's going to, is it going to punch on through? If it does, it may be some kind of a swing move that we get in here. It's hard to tell. I mean, this also could just be, choppy sideways move, but given the way this is setting up, it could push up and swing up to the upside. Given what I'm thinking, I mean, I don't know. I think this is a little bit of a crapshoot. I mean, we could get a false breakout up in here, turn up, get to the high here, and then just turn right back around. Because, you got resistance points here and here. So I'm a little skeptical of a move setting up to the high side here on semiconductors, unless the market's going to make another major leg up here. The next one is home builders. And home builders, big engulfing day on Friday. What did we just look at with TLT? Okay, so TLT continued to drop, so interest rates are going up. I'm not sure what, there may have been an economic indicator. I think there was something. Don't know if it was related to housing on Friday. I'm just trying to think, why would the home builders have jumped so much on Friday? There may have been something that I'm not aware of. So I know some of you folks watch those particular indices much closer than I do. I just kind of look at them for some kind of reading, just to see what's happening and what's, are they in sync or not with the market. Financials, I mean, look at this. This is what, Bob, this looks like Bob Wire to me. Okay, so this is just, this is what you try to avoid when you're trading. You try to not play. You see this kind of action, you just go, okay, I'll come back to the financials at some other time. All right, so you're not getting any kind of reading there. And then the last one is Biotech, if I can find it. Okay, so the Biotech's had a tough week. I mean, they just collapsed right down. So after pushing, after this collapse, rallied, and then here came another leg, wham. And then, this was on Monday, Tuesday, Wednesday, Thursday, Friday. A little bit of a bounce back on Friday. But definitely got the moving averages crossed here. Short-term trend is to the downside. We'll see how much, does it consolidate? Maybe pulls back a little bit up in here and then rolls back over again. We'll see. It does look like it's starting to turn a little bit. And the last one we'll take a look at is the energy ETF, energy select sector spiders. And so this is really mirroring the USL long-term bonds or oil, the 12-month oil. So this is mirroring it. It's it's right above that resistance and just kind of consolidating. Wouldn't be surprised to see another push and see this thing push right up here to the 233 moving average and take on this consolidation up in here and maybe even push higher. We'll see. All right, let's look at the casino stock. Okay, my take on Las Vegas Sands is it looks like it's in a big symmetrical triangle. It continues to push to the downside. There is just no good news coming out of Macau at all. Okay, so it just, every time it rallies, you think you're going to get, it's going to start turning and then it breaks. Okay, you just see this. And so right now, I got to go with the fact that the trend is to the downside, and I wouldn't be surprised to see this break right down below this low here, and break down further. Yeah, you could get some support down in here. That's a little bit lower than where we are right now. So again, it looks to me like another leg down. Got to stay with that trend. It's hard not to. All right, next one is MGM. Now, MGM Resorts International, this is doing something a little bit different. Of the 4 casino stocks, this looks like it's trying to put in some kind of bottom. This looks like a little bit of a head and shoulders to me. Now, it's not perfectly symmetrical, okay? It's not perfectly symmetrical. But I kind of like, okay, here you get a little movement down, you got deep, and you rally, and you get the movement down. And so it's a little bit like this is a mirror image of this. Then you get here and here. Now you get this one and this one, here and here, kind of like here and here. Now it's not perfectly symmetrical, I know that. Like here and here. And again, this is kind of messy in the middle. And let me take a look at something. Let me get rid of this, go back to my mouse. I want to look at the volume real quick, see if we're seeing. Okay. I was just looking to see in here. Yeah, we got some pretty good volume in this move here. It came above the dotted line, above the 50-day moving average. Looked like 5 out of 7 days, above the 50-day moving average in this push. And then here on this move, got some really, really strong volume coming back in. So, we'll see. I think, and maybe, I don't think MGM is as exposed to Macau as the others. And it could be that that's why it's turning, because I know when Wynn had their earnings that just came out, they talked about improvement in Las Vegas. So I don't I'm not swearing that MGM doesn't have as much exposure, because I don't follow. It's like I don't research these stocks. I watch these stocks from a technical perspective. Okay, but from what I've picked up, I think that may be the case, and that would make sense then to me why this would want to bottom in here and rally when the other ones aren't really ready to do that. So I'm going to watch this one to see if we get a move to the upside here. It may be setting up for that. All right, next one, Melco Crown Entertainment. And this one, of course, is a Chinese ADR, so it's heavily exposed to Macau. And I just don't see, this is in a strong downtrend. It looks like a very complex corrective action to me. It's these corrective waves are very hard to read, but clearly right now what I'm looking for is I'm looking for 5 waves down in this move, because every time we get this this ABC 3-wave corrective action like that, we break on down out of it, and that's what's happening with Melco. So the trend just looks like it's continuing to go down now. We'll see. That's what I'm looking for. Okay, I don't see any reason not to. It's not giving me any other picture anyway. Let's put it that way. And then the last one we'll take a look at is Wynn Resorts. And Wynn is doing a similar type thing to Macau. I think Wynn back, and I saw an article from all the way back in 2010 where they were talking, May 2010, where they were talking about, and that's 5 years ago, 65% of the revenue was coming out of Macau then. And I'm sure when this big move, it may even got more than that. So this is correcting and acting kind of like Melco Crown is right now. And of course, the earnings that came out just really smashed Wynn here. So my best reading here is A, B, C, and it's a big C wave with 5 waves in the C. And so I think we may be in that 5th wave down out of here. But again, I'm looking for 5 waves to form, so maybe a consolidated pullback and then one more leg. I was looking at where's potential support. I think this is where support could come in for Wynn, right down in here. We'll see. But that's my best reading on Wynn at the moment. All right, that's it. Long video, Saturday weekend update. Hope everyone's having a great weekend. And if you aren't a subscriber, it's very easy to do. It gives you access to the Trade Ideas webpage and the free PDF I've got for you, the 5 essentials. First name and email, and you're good to go. You can do that on the website or at the end of this post. Just click on the link there. And if you're not watching this on my website, head over to the website. There's a lot of things to check out over there. All right, this has been Joe from Beyond the Chart. I'll see you tomorrow. Talk to you tomorrow about Trade Idea video.